Good morning, everyone. Welcome back to the RationalInvestor.com's daily brief. Dun, dun, dun. Wow, stock market sure is coming off here. No doubt about it. And of course, we don't call it the fall for nothing. Actually, ironically enough, though, it's interesting to watch as stocks are sort of ebbing here. People are freaking out a little bit about the international debt situation and the cost of borrowing money going forward. Bitcoin's actually catching a bit of a bid. So I noticed, I think it was yesterday, we had that LJ breakout on Bitcoin as stocks initially broke. And we're seeing more breakage in the stock market. And it looks to me like Bitcoin actually is catching a bit of a bid through this. So exciting episode I think we're going to have here for you today. Actually, we have a special guest. Was totally surprised to see him in the lounge. Posting information, and I was just like, well, gee whiz, do you mind coming on the Daily Brief and telling us what you're thinking? And he's like, sure, why not? So we've got a really fun, action-packed episode. Of course, we've got the mayor of Vienna driving the bus today, but maybe the mayor's feeling a little bit under the weather. How are you doing today, Alex?
Still pretty good. Still pretty good.
That's good. Okay. Well, you take it easy. Go have some of that yummy vitamin C powder that you rammed down my throat when I was in Vienna.
Yes.
And have some fun. Of course, you heard the giggles. Mr. Bear himself is in the house. How you doing this morning, Mr. Bear?
Oh, hey. How's it going?
There he is. All right. Good morning, sir. Always a treat when we get to have Mr. Bear, and I can't wait to see all the fun and exciting information he wants to review today. So that's going to be cool. And our special guest we have on Jamie from the UK. He's going to talk a little bit of fundamental analysis for us. How you doing this morning, sir?
Not too bad. How are we all doing, guys?
Awesome. Possum. And actually, I heard earlier, which I thought it wasn't loud enough. Is my microphone too loud? Sorry. We were sort of chatting before we got the video up and running that maybe if we're really lucky, the Bear might even join the UK meetup in December, which I thought would be so cool. So Jamie's still lobbying to get pictures of Brian to make face masks so everybody can look like Brian at the meetup. Though. It scares me a little bit when he talks like that, though.
Just send me the photo.
Oh, got me all choked up there. All right, excuse me. Sorry about that. Don't know where that came from. All right, Mr. Bear, where do we want to start our adventure today? Keep in mind that we do have Jamie here. I don't know how long Jamie's got, but he wanted to just talk a couple minutes about his fundamental analysis information. Maybe as we sort of walk through your spiel today, you can find a nice little sort of segue to lead him in when we talk about the debt markets.
Yeah, that'd be great. I think if I remember from the lounge, he was talking about student loan debt. So I think we'll be able to, that'll be great. Because, it would just be hilarious if you see the stock market break on Monday and CNBC comes on and they get all these experts and like, we really think the reason why the stock market's collapsing is because millennials don't have enough money to invest because they have too much student loan debt. And that's the reason for the collapse that they chalk it up to. But I'll leave that to We are...
Yeah, okay, go ahead. Sorry.
Yeah, we are seeing markets breaking here. We left off yesterday's daily brief saying I wanted to wait for a definitive close below the neckline. And wow, today sure looks like we're going to get that close. Yesterday, we kind of came back up. Do I really want to collapse? And today they said, yes, I think we do. We've got our confirmed divergence after today's close. So after Monday's open, I'm going to be looking to get in short on most of these markets on any kind of pullbacks. So we're seeing that come in really nicely. Actually, as Brian said yesterday, it's almost shocking to see how perfect this market structure top was. I mean, this is almost too perfectly telegraphed, whereas the Dow doesn't look as nice. It broke to new highs. It's got kind of this empire top. I mean, if you want to use reversal signals, this is pretty nice looking here from what happened yesterday. And today we've got that gap fill. We're testing this kind of awkward reversal area on the Dow from the I guess this was last week. And NASDAQ really never decidedly broke out. You know, you got a couple of wicks that popped up, but the NASDAQ just was not buying that market. And then, of course, I mean, props again to Brian showing that Dow Transports versus the Dow. I mean, this was broadcasting a big problem earlier this week, late last week. And sure enough, today we're getting all of that breakdown. Quickly,
your AMRs come right back down to the bottom of the range, eh?
What is that?
Are you still watching your AMR?
AMR. Which one's AMR?
Oh, actually, maybe it's not called AMR anymore. Years ago, when I used to trade American Airlines, I used to call
Oh,
it.
yeah. American Airlines. I was watching that the other day. That came all the way back down to 78.6. I was watching that yesterday. I didn't see where that opened today.
And it's just not even stopping here. Can you see my screen? Just looks
that looks like
shit.
Yeah.
So there's no way the industrials can rally in the face of this. This is majorly problematic. So.
Yeah. How are the other airlines looking? LUV is Southwest. That one hasn't broken just yet. And Delta.
Oh boy, that's an M top though, huh?
Oh, is it? Maybe we should be looking for puts on. Oh yeah, look at that. This one looks. If anything, this is probably the one that hasn't broken down yet. Maybe that's a good idea to be hunting because Delta's already broken down here too. That's testing mountain. I mean, boy, these look like crap, don't they? Whew.
Yeah, I think I don't, it's, especially on something like AMR or Delta or something, it's way too late to be thinking about shorting. The issue with Love, though, is that it's like the best performer in the airline sector. So in years gone by, I've always been reluctant to short Southwest because they have like the best customer service, the best ratings, the best on-time ratings and stuff like that. So I hate. It's kind of like shorting Apple, right? I mean, you almost get yourself into trouble shorting the leader in the space. But nonetheless, I mean, that's an M if I've ever seen one. And if it can come back down to that W down around your 78.6, 52, 53 bucks, I think that's a buy.
Well, there's also a little bit of fundamental news driving these stocks lower, which is that yesterday the Senate passed a bill like 93 or 94 to 6 that the airline industry, the FAA is now going to set specific guidelines on seat size on airlines. And also airlines are no longer allowed to throw people off of planes once they've already been put on the plane. Of course, I think there's probably an exemption for people who are unruly and difficult passengers. But as far as overbooking planes and throwing people off once they've gotten off, that's been built into the bill as well. And I think Trump is expected to sign that in the next couple of days.
Really? I would have thought he would have killed something like that. But oh well. Yeah, and I guess the way I look, I mean, that was just a travesty when you see like those videos of people like being dragged off of airplanes. I mean, that can't be sustainable. But at the same time, what I'm hearing is the leverage that the airlines have is maybe waning a little bit here. So if anything, that's probably good for the consumer. I'm surprised Mr. Trump would endorse something like that, though. But hey, you learn something new every day.
Mm.
All right, so do we want to talk a little bit about your Vixinator here?
Yeah, it looks like I was the second time now I wasn't able to get in on this trade. And sure enough, we're popping up as the stock market comes down. So yeah, it is what it is. I guess, from what I said yesterday, and this is what Brian, we were talking about before the brief started, is that if the stock market does crash here on Monday and Tuesday of next week, maybe the liquidity that we were talking about yesterday, that these spreads that exist in these options and derivatives markets may not actually be there, that there may not actually be a buyer interested in buying my position at a reasonable price that I can actually make a decent profit off of because, the liquidity is drying up in these areas, and that's kind of scary.
This is a tricky vehicle to trade, don't get me wrong. And just the fact that you've actually made money trading the VIX in the past is a testament to your professionalism. So way to go on that regard.
Thank you.
What I posted in the lounge, I found it on Twitter, and I think it's really good little sort of piece for your journals, everybody, was I found a really cool video on the volatility index that somebody put together, and I think it's like data over like 20 years or something. And I'm just scrolling through all the crazy stuff you guys are posting in the lounge here. Where the hell's that video? But do yourself a favor and watch this. Even bookmark it if you have a chance, guys. This is such a cool video. All right. That was different. Wasn't expecting that. Okay, well, I'll have to put that away. Sorry, guys. I don't want to get in trouble with YouTube. But anyway, I tried to post. Well, I posted in the lounge so you can find it. But what did you think of that volatility index video that I found for you there this morning?
That was awesome. I'm going to save that. I'm probably going to play that when I'm at the gym. I'm going to show everyone. I'm going to be like, yeah, this is awesome.
I thought it was pretty cool. So do yourself a favor and just bookmark this. It's kind of a fun visualization of how the volatility index changes given different market states over the past 20 years. Really cool stuff. All right, so stock market's looking a little weak. You know, just to FYI to everybody, when it comes to the stock that I buy, I don't really like to be in these stocks if they're breaking down. And our little DPW broke those lows from back in August that was put in yesterday. So I just simply hopped off. I took like a 2 or 3 cent loss on the trade. So just an FYI there. Interestingly enough, you know, like our VCIM stocks, and I've seen this happen before in the stock market. This isn't anything out of the ordinary. A lot of times the VCIM stocks, they actually go up when the stock market starts crashing and growth elsewhere is looking a little bit weak. So ironically enough, like this Orestone, I got a bid working, but you can see the market's actually moving up here. Boo! And Shane, I don't know whether you can, but man, I would seriously recommend you be on top of this Big Rock Brewery. I'm trying to bid here, but you can see there's no interest whatsoever in selling me some stock here. Still have the NASDAQ puts, our little insurance policy working, so I'm not going to be touching that. Got orders to sell 2/3 of the position at, you know, double our purchase price, so we book a nice little return should that trade work, and it's just sort of working away, doing its thing. The only trade really that I'm pretty upset about, well, not upset, but, you know, I've talked lots about it, was I went and bought a bond call up here. Wow, was that ever a bad trade? And the one good thing about buying calls, and if you do this correctly, then really the maximum risk on the trade is the call purchase price. And these calls are trading at about 20 cents on the dollar right now, so I got destroyed there. But, you know, as I said, the stock market put, which I did through this Pro Shares Ultra, it's performing now. So, you know, in essence, it becomes almost a zero-sum game. But anyway, that's sort of what I'm doing in the stock market right now. And just an FYI, like I said, I did hop off of one of my long stock positions because I just don't want to take the chance if they're breaking lows. And I also just wanted to update, mention to the group, I am still following the swing model. I just haven't seen anything set up through the week. So as a result, I haven't been reporting anything. I don't like the look of this market from a swing trade perspective. So I'm just biding my time, not doing anything at all. So just an FYI there. Anything else are you doing in the stock market right now, Thomas? You doing it? Actually, I thought it was interesting. I saw someone today say, screw the FANG stocks, buy the BANG stocks. Does anybody know what the BANG stocks are? That was Barrick, Agnico Eagle, Newmont Mining, and Goldcorp. So, and I'm actually, you know, like your Macro Voices guy, he's pretty bullish of gold here, right?
Yeah, he made some comments yesterday during his broadcast that he was, you know, which actually was funny because we said the same thing before they went live, in that he was shocked at how resilient gold has been through the dollar's bullish move here over the last week. I mean, gold's kind of stuck in the sideways channel. And today there was some commentary with, I forget who their guest was today, but essentially he was talking about de-dollarization and how China is very much trying to get that through. And they changed essentially the peg of the renminbi from being pegged to the dollar to being pegged against a basket of currencies. And in addition to that, they've also tried, and I think they've passed this, where certain oil contracts are now denominated in renminbi as opposed to dollar. So the guy goes on and talks about why would people be interested in buying things denominated in renminbi? And he said potentially they were going to offer things like bonds or promises, so to speak, that they would make more money by owning renminbi. But really, that didn't seem like it was going to be so interesting to countries like Russia. So instead, the hypothesis now is that since the renminbi has switched off of the US dollar, that they are also denominating gold in renminbi as well. So maybe they're promising Russians a whole bunch of gold, and they've also promised to control the price of gold and eliminate the volatility so that they can sort of give a really good product or good trade to the Russians. Like, hey, we're going to keep gold at this certain spot. We're going to keep it from pushing up and down. And therefore, if you hold a bunch of renminbi and you promise to hold it in gold through our economy, therefore we will promise you greater returns. And this is really interesting because gold really hasn't moved at all. And this is the first time in a long time where we've seen gold just kind of get stuck like this for a while and not have any kind of crazy volatility. And that's the idea right now. So if this is true and there's a whole bunch of gold being controlled by China, which we have known for a couple of years now, probably since 2012, 2013, the Shanghai Exchange, they were starting to trade actual physical gold on their exchange as opposed to paper-backed gold. And what all this basically means is we know that China has large gold storages and they control a good amount of the physical gold. So I mean, something's happening here. We don't know what it is yet, and it's certainly starting to show its face. And then, moreover, interestingly, and this is kind of moving away from gold, they talked about oil a little bit yesterday in that the price of oil, they were shocked to see it rise over 75 because they were talking about the build numbers and they go over inventories a lot. And if you're interested in oil, you should certainly explore all those inventory figures because once they get released, the market really moves in one direction or another depending on what those builds look like. And they released an 8 million barrel surplus worth of oil that no one was really expecting, and the price of oil collapsed. But then within a couple of hours, it retraced all the way back up to the area before it broke and then even went higher. So what they concluded is basically that they think there's something going on that nobody really knows about, that there's some insider trade, there's some insider information that the public just doesn't know about, which is making oil stronger than what it should. So that's my market wrap. Brian, if you want to take it away, or if we want to move it and pass the ball over to Jamie, I think.
Yeah, I mean, the interesting thing about all of this is I probably should have had my head on straight here before I did all this, but you could simply make the argument that, and now, here's the kick in the pants. I mean, we've been talking about this, for people that joined me years ago, I talked about these fear greed cycles and the pivot in the market and how quickly things can change. Well, you guys, I mean, all of you that have been participating on the site over the past year or so, you just watched history unfold there. And ironically enough, hopefully everybody remembers this for the next cycle, which it should be a greed cycle peak. It's in 17 years. Hope to see you all there. But I make the very simple argument, and of course I was expecting a little bit more of a rally here, but it just never came. And this is a weekly chart of the bond market. And you can see how the bonds have just fallen out of bed here, and the selling is accelerating. And momentum is also fairly nasty on the downside here in the short term. This has got a head of steam behind it, and I might argue that a big part of that whole sort of restructuring of the world. And the worst part about it is that the people inside the United States of America are publicly now saying they don't want to be this sort of financial policeman of the world. The Fed has said that recently. And of course, Mr. Trump, he's picking fights with everybody around the world. So that's not a sign of leadership. If anything, they're trying to back away. And this gets scary, right? Because really, you could argue our whole economy, and if we think about things like you've heard me squawking about the Canadian real estate market and how vulnerable it is. Just give me a second here. Let me find the damn chart. Here's this Canadian real estate proxy, and it's basically in free fall right now. And Shane, and I don't know where Andrew is, but this is really good lessons for you guys. Remember, we would drive around in Burnaby and stuff, and all these damn high rises are going up everywhere, and I'm just shaking my head. This doesn't make any sense. I mean, the fundamentals don't justify all this development. Well, I bet a lot of those buildings are going to sit half built now for some time going forward. And I was even surprised to see there's even more development going on over, like I was in North Van yesterday. And it's like, are you guys not seeing the writing on the walls? So, the interesting thing about this is that the policies in the United States, and I've sort of talked about this recently, they have, the Americans don't understand, or frankly, I don't even think they care. They don't understand that a lot of this sort of world economy is built on the perception of what sort of the cost of borrowing is. And, the Americans have officially said that we are changing the cost of borrowing. I think this is a great segue because you just never know how these crises ultimately end up. The mortgage market, nobody saw Lehman Brothers explode. I can absolutely tell you that. I thought it was interesting. I think we looked at the chart yesterday where we saw that the S&P 500 actually flashed the sell signal in I think it was March 2006, 2007. And of course, the financial crisis was 2008. And, I think we talked a little bit about Macro Voices guys saying that they kind of feel as though, 2018 is very much like 2007. 2019 could very much be like that 2008 sort of scenario. So I think this is a great segue for Jamie has done some really good research on the student loan situation. And he's thrown some interesting charts and some analysis together. And like I said earlier today, he was in the lounge just posting this data. And so I said, Jamie, can you come on and talk to our community a little bit about what you're seeing? And here he is. So, Mr. Jamie, have you got yourself a microphone?
Yep.
All right. Do you want me to screen share your slides, or do you want to screen share from your end? It's entirely.
I'll have some practice, so I'll screen share myself. Okay. Tell me if you can see. Let's have a look. Okay, how are we looking?
All right, I see picture after. Well, there you go. There's your desktop. There you go. All right, so cool pictures I see.
Okay.
We have to check in with the mayor of Vienna.
Yeah.
How are things looking over on YouTube, sir?
We are awesome, I would say.
All right, thank you, sir.
All right then. Okay, so yeah, hey guys. I thought today I'd chat about the student loan deaths that the US is undertaking at the moment. Reason for it is
this the US alone, or is this like a global problem?
This is solely the US. So. Okay. So this is a chart.
In the UK, do they talk about student debt loans and stuff like that there?
Not at the moment, but I can imagine they will be in the future because it's becoming like America now. So whether that will have an effect in the future remains to be seen. But I think we do things differently here. So I don't know how you pay off your debts with the American government over there, but in England and the UK, you only have you only have government debt, sorry. So and then the interest you pay is actually the RPI, which is quite funny to be honest, since everybody goes off the CPI. So yeah.
Okay, I apologize for interrupting. You probably watched these in the past. I have a bad habit of interrupting Thomas, so I'll shut up. Go ahead, sir.
Okay, Brian, no problem. So yeah, as you can see, I like to every quarter have a look at the 90+ days delinquency rates. So the student loans have been the ones that have caught my eye. So I thought I'd show this to begin with, and then if you haven't seen already, I did share. How far is that? That's lovely. Right.
What the hell was that?
I don't know.
I saw that in the lounge.
I'm not going to comment. Right then. Here we are. So yeah. So as you can see, so I'll go through the different parts. So in the bottom right-hand corner here, you have the total student loan balance with different demographics. So as you can see, the student loan balance at the moment is actually $1.5 trillion. To put that into perspective, I believe the US economy is around 20 trillion. So that's about 7.5% of the US's GDP. So, I mean, that's quite a large amount considering, well, we'd like to say just student loans. The thing that really caught my eye was the delinquency rates from the private sector, so private loans. The delinquency rates for private loans are actually at 23% compared to the Federal Reserve and the private for non-profits. So yeah, there's lots of different, if people are interested in this, you can have a look on the New York Fed website, the Federal Reserve. If you love your data, then that is the place to look. Also, the St. Louis Feds as well do some pretty cool stuff. I'll post it into the lounge if anybody wants it, or if anybody wants to know any more information, just give me just drop me a message. But that's basically it.
According to this, about 4.8% of all those $1.4 trillion is in delinquency.
So altogether, the balance is $1.5 trillion. 64.3 billion of that is in delinquency already, and 124 billion is at default, which is just here. Okay.
Oh wow.
The number of borrowers in delinquency is at 2.1 million. So 2.1 million of the borrowers are actually 90+ days delinquent.
Wow.
And 47.5% of borrowers' balance actually rises every quarter compared to the last quarter.
So our assignment here, everybody watching this, it seems to me we should be building a list of who these private student loan issuers are.
Yeah, so that's
probably
a
trend there.
Definitely. So I've had a look. I believe Bank of America do quite a lot of the student loans. If anybody from the US is here, could actually enlighten us, that would be cool, because
Thomas just said here, Discover Student Loans, Nelnet. So already Sally Mae already is putting, oh, isn't that interesting? So of course the US housing market blew up when Freddie Mac and Fannie Mae blew up. So maybe the next government agency to come under attack is this Sally Mae.
Okay, very interesting.
Right. So Thomas is already building us a shopping list here. Thank you, sir.
Cheers, Thomas. Yeah, so I mean, in the UK at the moment, it's not much of a problem as of yet, simply because they've only, so before it was 3,000, but I believe it was 2012, they changed it to 9,000 a year. In the US, I believe it's ridiculous now, as far as I'm aware. But yeah, so yeah, just something to keep a lookout, to be honest. I mean, anybody can try and look at what they think will trigger the next recession, but I always like to have a little bit of a research in different sectors now and again if I've got some free time on my hands. So yeah, that's basically everything what I wanted to just show. Nice and easy.
Cool information. Thank you, sir. I appreciate that. So a nice graphic here, and like I said, if anything, probably what we want to do is we want to start building our shopping list of ideas. So you've given me something to think about here through the weekend. Thank you. I appreciate that.
No problem at all. Right. How do I get rid of screen share? Okay.
All right, now you got to reset.
You can have it back.
Okay, so doom and gloom in the stock market. Interest rates are going up. Student loans could become our focal point. My hunch is that this is probably where the poop is going to hit the fan through 2000 and I guess 19 maybe now. And really, it's just a question of us maybe putting together a list of thank you, James. Also, list of publicly traded student loan companies. James, fucking hey, man. Oh god, the guy's. I even said this before I started the video here. We recorded today. I said, I am so privileged to be able to just hang around with you guys. You're all so good. So it's so awesome. Thank you. Awesome stuff, Jamie. And now, if anything, could you maybe just throw those couple slides together on like a Google Sheets or something along those lines? And then maybe we'll add James's list of stocks to that sheet as well. What do you think? Is that doable? Is that information that you want to, do you mind us putting that into a PDF or something?
Sorry, I was just messing around in the Hangout. Yeah. No worries. I'll sort that out. I'll create a Google Doc and then put it all together.
Thank you, sir. Totally appreciate it. Awesome stuff. Awesome. All right, Mr. Bear, I see he has an Ethereum chart on his screen. Are you feeling like you want to go and take a dip into crypto land now?
Yeah, there's a couple, and thanks, Jamie, for that. That's really awesome. And I really think this is a serious issue in the US, and more attention should be brought to it, because I mean, the millennials were kind of the generation that's supposed to be bringing new liquidity and new money into the market. And if we're all saddled with this student loan debt, how do we buy houses? How do we prop up the housing market? How do we invest in the market and prop that up? I mean, it's just like, it's a nightmare waiting to happen. So on to crypto. I guess I'm going to start. I guess we should probably have a little bit of a lighthearted, fun article to start out with, because after all the doom and gloom in the stock market, it kind of makes you want to feel like the sky is falling. So if you want to be a 1%er and join the club, all you have to do is own 0.28 of a Bitcoin. Because if you go in and figure out what the fixed supply of Bitcoin is, it's this number here, roughly 20 billion, right? So we got 20 million, sorry, it's almost 21 million Bitcoin. And if you divide that by the population of the world, I assume you get around 0.28 BTC. So if you hold that, congratulations, you're now a 1%er and you can go and join the Wall Street elite. Ha ha ha. Okay, so that's that. Now, there's something really crazy going on in the ETF world. I mean, we know that this whole ETF situation has been horribly confusing, horribly misleading, and they just continue to delay all of these decisions. And there's so many of these other ETFs, and sort of like terming what they're doing as far as the language in each of these proposals. And this came out yesterday, where there is a proposed rule change to the Granite Shares Bitcoin ETF that they made. Now, I went and found this article because they actually had links directly to the amendment and the official SEC documents. So it's not that long. They actually keep a nice timeline of what's been going on, why they've postponed it, et cetera, et cetera. And essentially what's happened now is they've now given a new date that by October 26th, now this isn't a decision date, it's more of and I'll just read this verbatim. Accordingly, it is ordered pursuant to Commission Rule of Practice 431 that by October 26th, any party or person may file a statement in support of or in opposition to the action made pursuant to delegated authority. Okay, well, what the hell does that mean? That sounds like lawyer mumbo jumbo.
Totally. I'm just sitting here snickering.
Right. So, what does this mean? And I think what it really is they essentially delayed the decision on many of these ETFs, and they're making a quote unquote rule change. Now, what is this rule change? And the only thing that I was able to find was from this article that instead of the Granite Shares Bitcoin ETF actually doing physical Bitcoin, that they would partner with the CBOE and the futures product that they have to only offer paper traded Bitcoin. Now, if that doesn't sound a whole bunch of alarms in your mind right away, you have a cement block for a head. but I'm sorry, this is like this is very dangerous stuff. And maybe this is why this keeps getting delayed and delayed and delayed, is because I think the SEC believes that if there's going to be physically delivered Bitcoin and prices are going to track physical Bitcoin pricing, the SEC has come out multiple times and said that they think it's manipulated, they think it's fake. So for whatever reason, in their convoluted idea on how this whole system works, that if they suddenly find a way to insulate the ETF through the futures protocol, futures product, that maybe this manipulation won't be as serious and serious of a threat to approving something like an ETF. Now, again, all this is very, very convoluted and confusing. They're doing the same type of rule change to the ProShares Bitcoin ETF. I didn't see anything about the VanEck ETF specifically, but I would assume that probably won't fly for that, because I think the VanEck ETF is very much attached to the idea of using physical Bitcoins as opposed to this idea of these paper settled, partnered with CBOE futures products. And they're just looking for, I guess it's any kind of input from whoever wants to give it to them about what they think about doing that. So again, we're going to get the same open floor. I don't know if it's going to be the same website that they had where people were posting from all over the world. Yes, sir, please, can I have a Bitcoin ETF approval? Very much would appreciate. Thank you. I mean, I'd really like to see a professional discussion and some real institutional guys come in and state their opinions. And really, this should just be a forum at this point. I don't know why they haven't done that, but.
So what I'm hearing is that these futures, CBOE, CME guys, they're just throwing their weight around.
Seems like it.
And I have to agree with you. I like the idea of not diluting the shit out of this thing, and creating all these paper proxies and not really knowing exactly how many Bitcoins are out there and what the value of each of them are. So as the soap opera turns, but if anything, I hate to say it, and this is just probably a commentary on Brian's part, the older I get, the more I see how really manipulated this whole market is. And I get the feeling in the United States that if the higher ups, the people who are in charge, if they're not controlling this asset, in the United States, they just make it illegal for their citizens to participate in the market. And then as soon as they put all the pieces in place to control the market and control the business and make sure the revenue comes to them, then they make it legal for their citizens to participate. So this is more of that kind of talk. It's a little disappointing.
It is, and it does seem manipulated. I mean, the timing of this, the fact that they keep postponing it, and the fact that Bakkt is trying to launch their product, and I don't even think they need SEC approval for what they're trying to offer. I think it's more CFTC, and I think CFTC has given them the go-ahead, and they just need to launch this thing first week of November. So it's kind of like
they've kind of pulled an end around on the SEC by sort of saying crypto is officially a commodity, so this is our playground. Go away, SEC.
Yeah, and think about it. If you're one of the major exchanges, like you're this Bakkt company, and you have deep ties to the New York Stock Exchange, to ARCA, to NASDAQ, you have all these high-level executive guys with deep reaches of influence. Who knows who they have in their pockets at SEC or at CFTC, and how this whole plan has been concocted. I mean, I know this is all conjecture and borderline conspiracy theory stuff, but I mean, the more you read into this stuff, you can't help but think these things. So it is what it is. We'll see how it all unfolds.
As Shane says, just go and buy your Bitcoin, become the 1%er, and put it on your cold storage wallet, and don't even participate in these ETFs. So if you want to trade them, great. But I don't know whether, if you wanted to be invested in Bitcoin, whether it really makes sense going the paper route. I think you're best just, and everybody here at TRI, of course, we're not sucked into this sort of retail public sort of fluff.
Mm-hmm.
But if anything, what this will do is this will set the ground for the next insane bull. and prices will get bid up to just ridiculous levels, and we'll all be in here going, oh, banging out Lambos, blah blah blah. And the public, of course, will come in and buy the paper up top. So cliche. Okay, do we want to actually get into some charts? Are you actually hunting setups here? I actually looked at a chart last night, and I thought that it had a Thomas short written all over it, but I don't know. What are you thinking on? Are you even trading Bitcoin these days? You're trading mostly Ethereum, eh?
Yeah, I haven't been able to get a good setup on Bitcoin for a bit now, but I did go short yesterday on Ethereum into the kind of dump that we saw in the overnight hours. But this didn't really materialize into anything real. So I actually ended up, I woke up this morning, I had some crazy dream that, things started rallying and my stop got skipped. So I woke up at like 6:30 in the morning and I saw this thing starting to put in what looked like the beginnings of a double bottom. And once this candle came in here, I actually closed out my position before my stop. And I don't know, I guess I was just kind of spooked by my dream, but I did put in a long position here after this kind of W reaction ended up confirming. And the same thing happened here on Bitcoin as well. If you go down to an hourly, you've got this really wonky looking divergence that ended up coming in with a really ugly market structure bottom, which, I mean, if you go by tails, this is valid. If you go by candle body closes, this is invalid. So there's a lot of what I'm seeing out of the market is there's a lot of sort of indecision to, and I'm going to call it phase transition now, because I think we're in the midst of a transition on the higher time frames. I'm seeing less and less setups that I normally trade come to full fruition. And to me, that means that the market states are changing. And I'm again.
That's great journal information, people. Listen to Mr. Bear here. Good, you're so pro, dude. You're so pro.
So well, we'll see if I'm. It's just an anecdotal observation, right? One person does not mean the change in the market's coming, but I mean, it's just interesting to see because if you draw your fibs from these areas, you can see, hey, the last fib that we drew that I have on my chart from all the way down at the lows from March. 78.6 is right in here. We're right in a reload zone. We got picked up in this massive tail on the daily candle, rallied up, got rejected. So you could say, hey, we're still in a bear market. Sure, that's obvious. Come back down, redraw your fibs from this low to this high. Again, reload zone, no new lows. And then now you can redraw fibs again, and we keep bouncing off this $6,000 area. And yet the market doesn't want to accept below that level. There's so many tails. We tried here, and we tried a third time here, and it's not happening. And now we've got this elongated, slow drip of doom, but yet the market still hasn't rolled over yet. So to me, this is either somebody who's been accumulating up here and in here on the short side, or what I really think is going on is someone's building a bottom down around the $6,000 level, and they're trying to accumulate up in here too. So I'm seeing, again, these anecdotal ideas that, hey, there's something going on from a phase transition to a slight bullish bias in this market. And I just want to see it confirm. I want to see this evidence actually come through because, you have this market structure bottom here.
Can you do me a favor and throw a trend line off of that peak in Bitcoin from, well, actually, I was going to ask you to zoom out. Yeah, off of that high. And then off of the high there, and I can't see the bottom of your screen because of all the people. Looks like it's
let me get rid of that though.
Anyway, the point that I would just make is that it looks to me like we've got like a fractal that's trying to come in right on this trend line. Now, I wouldn't do it off of that one. I would do it off of the net that second high, that high to that high, yeah.
So
and then extend that trend line over time. I just find it really interesting that a fractal is trying to fire right off of this trend line. I don't know whether we can call it an LJ or not, but I mean, look at that shit, eh?
Yeah, that's interesting.
I mean, look at that fractal that's trying to fire right there, right? We could call that like an inverted empire, right? So this is a really, really important level. This is actually the first time that we've closed above that trend line, eh?
Yeah.
So, if we can get a continuation and we tick up through yesterday's high, I think that's actually a buy signal.
Yeah, I mean, I did put on a nice long position, but only through Ethereum. So I'm still bullishly biased. And again, for Brian to have this trend line show up on the chart and see this break of the trend line, it's certainly interesting. And it's just more, little pieces of evidence that something's going on here. And the market's kind of calmed down. I don't feel like the panic that you usually get from these bearish dumps isn't there. And while, we've been saying, hey, trader Dante is always like, well, slow drips of doom are usually really bad for the market. I would actually argue.
I think it's about location. This is, in my opinion, this is a horrible place to be hunting shorts. Off of your hourly charts and stuff like that, trading your fucking monster day trading. No, I mean, have fun. Short, long, whatever. But if you zoom out on that daily chart, and we talked about this before, like on Litecoin and stuff. If you zoom out on these bigger charts, is this really where you want to be hunting shorts? I don't know. It doesn't make sense to me. So,
yeah, I agree completely. So, I mean, I'm not pounding the table like, hey, you got to buy this thing before it jumps and makes new highs. But I'm just saying that maybe this thing's just starting to get ready. I mean, what are we, 10, 11 months into this bear market? Things are
due for a bounce, eh?
It would be nice. I mean, at least one bounce that gets back up to 10,000, suck all the people back into the market, and then see where we go from there. But I mean, the weekly is really what I'm watching right now, because I don't have, my traditional setups on the daily, but I do have potential setups on the weekly. And you can see, again, we're going to talk about this until it confirms. We've been talking about this since frickin' July, where you've got this bull div here that is confirmed, but again, I don't have any structure to work with. So give me a W, and that'll be our first one. And I'd be really excited to see that pop in. So that's what we're waiting for. I mean, you look at the longs and shorts, very much, I mean, it's all over the place. And when you see it like this, when you see this kind of confusion across time frames, it means something's changing. Something in the market.
For Thomas Lee, I sort of was talking about this recently, but I don't know how crypto is going to act if the stock market falls apart. But I'm very, very interested in the fact that literally the moment China and Asia opened up there 2 days ago and started to wobble, and then Bitcoin caught a bid, and then the stock market kind of calmed down a little bit near the end of yesterday. Bitcoin sort of topped out a bit, and now, further lows on stocks, and Bitcoin's caught a bid again. So there is actually something going on there, which I don't think we've ever seen before, guys. This is kind of historic here. I think in a weird sort of way, Bitcoin is actually a little bit of an out for people. Something like that. And Thomas's comment here that, just the price action itself, something doesn't smell right here. Something's changing. So, I personally have a feeling that some of the price action that we're seeing right now actually is directly correlated to what we're seeing in the people are a little bit scared in the classic equity risk assets. So,
yeah. Wouldn't it be great if Thomas Lee put out a research paper about the correlation or inverse correlation of the markets to Bitcoin? I hope he does that. That would be great.
Okay. Has he not been talking about that for a while? Yeah, I think he did quite a lengthy one recently.
Well, maybe we can get him on here to talk about that.
Yeah, wouldn't that be cool? We actually get him to come on here. Hey, can you school us a little bit here, Thomas? What exactly is a fear and greed cycle that this crazy Beamish guy's talking about?
Yeah, I know he does have quite a few videos available. It'd just be great to get him live, right? Anyway,
well, I'm sure he's in pretty high demand too. So
yes. All right.
Okay.
So,
are you hunting any setups at that? Well, you said you're long, eh? Right, off of some lower time frame setups.
Yeah, I'm long Ethereum right now. I really want to get long Bitcoin, but I still don't have anything. And the way that this is setting up, I can't get in on it. I don't know why this keeps happening, but it is what it is. And if I can play it through Ethereum, I'll just do that because I think these markets are very much
Actually, yeah, Shane's making a really good point here. He posted in the lounge, and I saw this article yesterday. We haven't talked about it today, so maybe we'll just have the bear chime in. Did you notice that TD Ameritrade? Now, when I saw this yesterday, Shane, I heard that they planning on opening this up into 2019. So I didn't actually hear that it's anything over the short term. But nonetheless, it's sort of more anecdotal evidence that the big boys are trying to come in and establish a foothold in here, right? Did you see anything about this, Thomas?
Yeah, I thought they were doing, that this news had come out a bit ago. Maybe they're just getting more serious and trying to commercialize it more.
Could be. I just before we finished here today, because we are getting close to the top of the hour, I just saw Shane posted on the lounge, and I just thought I'd mention it. So.
Yeah. So I mean, as far as Ethereum's concerned, I do have that long. I like the moving average cross here. The problem is I'm going long off of an hourly market structure bottom, so I don't know how serious that can be. But we tested 38.2 and kind of got rejected. Now we're coming back up again. If this gets rejected another time, then I'm going to have to walk away from the position. But I kind of like what I'm seeing. It's not as strong as I'd like. The fact that, any kind of divergence that has to come in, we have to cross over this hump here in the MACD. And if you look at the 4 hour, it's really not very friendly, bullishly or bearishly for either matter. But this long sort of market structure bottom could potentially come into play. And that would be more interesting for me on the long side. And that's kind of what I'm hoping develops.
That's one hell of a triangle. Can you zoom back out on that chart just a bit? Look at that triangle. Jesus. Something is building here. I really do like the idea of a nice stab up into that 230, 240 area.
Mm-hmm. Yeah, that's actually, well, I guess.
And actually, it would be interesting if you did there might even be a bot set up there. I wonder if this consolidation right here is actually setting up off a 25 level.
Are you talking here to here?
Yeah, there to there. And if you did a fib off of that, did we get down below 66? That's awful.
Yeah, we did just a little bit. Close.
Yeah, I know this is trading as an art form, not a science kind of idea. I definitely
right on it.
Oh, look at that, eh? Right on the fucking nose. I mean, you got 3 serious lows there. So I mean, it would just. Can you just clone that? Yeah, can you just clone that study and see if the 25 sets up off your W there? That'd be interesting to see. But yeah, I mean, if you are long inclined, I could see it. I mean, it's not out of the question by any means.
Looks interesting.
So, and W's are a girl's best friend. If you change that chart to a line chart, because if we see a line chart there, you're going to really see Thomas's candle body closes. There's Mr. W. So yeah, you can see Mr. W is working away. I was actually thinking if you could clone that first fib that you did, and project that off of the bot lows, yeah, and then move that over.
All right.
Anyway, watching technicians do their craft.
Yes, on my MacBook trackpad.
Oh man, that must be tough on laptop. The fact that you can actually do this impresses the hell out of me.
I actually have to give credit to Crypto Roo. I think it's Jesse out of Australia. He heard that I was having issues with Chrome and gave me this extension called the Great Suspender. And what it does is if you have unused windows, or rather tabs in Chrome that you haven't opened up and you can set the time frame, it'll suspend them and therefore free up some resources. And I haven't had that many problems through the daily brief, so I think it's worked quite well. So
yeah,
thank you very much.
These days.
Oh, thank you. I got myself ready for you.
You've been wolfing down more of the Mayor of Vienna's vitamin C powder. Oh, have you ever tried vitamin C powder? It's like pure ascorbic acid. Oh,
No, I prefer it in pill form.
Anyway, all right. So hunters, get out there and hunt your setups. The cool part about it is we may be witnessing history here too, guys. As the stock market's melting down and people are losing faith in the classic system, it's interesting to see how crypto's catching a bit here. We do have the weekend frivolity coming up here, so please understand, everybody. Get ready for the weekend. You never know what the hell's going to happen through the weekends here. But on balance, I think Mr. Bear has set us up pretty well here heading into the weekend. So thank you very much, sir. I totally appreciate it.
If you don't mind, just one last thing that I
Sure.
really think is important to mention and also fascinating, in that Ripple is now tradable on a Forex broker's website. It's the only cryptocurrency that they're allowing to be traded. And evidently, according to this guy who posted on Reddit, he called customer service and they said that you can use Ripple, deposited Ripple, to trade Forex, meaning if you put your Ripple on there, you can take positions on other Forex currencies and take your profit in Ripple. And then I decided to Google a little more into this, and it seems like there's lots of people that have been asking for this to happen. People want Ripple to kind of become a Forex currency, which is really strange to me, but it almost makes sense, right? Because they're trying this new X current system. And if this actually gets installed into all the banks, they just kind of built their own back door into the entire financial system, and Ripple's kind of been installed all of a sudden. So that jumped out to me as something really crazy, and I thought it was worth mentioning.
Big news. And we often make the argument, right? We don't know who the ultimate winners of this space are. And anybody who tells you that they do know, I think they're full of horseshit. I mean, personally, I would prefer just to own a little bit of everything. Wow, what an interesting development there. I certainly wasn't expecting to hear that. Yeah. But I guess it would sort of explain why Ripple has been outperforming of late. Here's our crazy squiggly line theory. So those people that are interested in hunting trades on Ripple, just keep an eye on this potential bot. You can see it's sort of working its way, forming out here. So interesting information. Thank you, sir. Always a wealth of information, this Thomas guy is. I love it. Thank you, sir. Totally appreciate it.
My pleasure.
All right. So the only other thing that I'd mention here this morning, very interested in Decred, and kind of like what I've been doing on some of these names that are trying to put in bottoms. The Verge, I was slowly building a position here. Basically, I'm betting that crypto and Bitcoin and Ethereum and all these kind of trades and stuff, I'm betting that the market's going to go up. So, I mean, I'm putting my money, where my mouth is. Been filled on 3 of my bids here on Verge. And just a heads up, been hearing a lot of people chattering about Decred lately. Sjord, his algo, spat up a big buy signal on Decred here. Been hearing a lot of people on Twitter talking about Decred. So here we go. We're going to start building a position on Decred as well. So just an FYI to people, just understand that no video, no vid on here. I'm not quite sure what you're referring to there, Bob. But just a heads up, I am starting to build positions here on Decred. Same sort of thing that I did there on just click on my picture. Maybe you're clicked on Thomas right now or something. So just an FYI, same sort of thing I did on the Verge. Just to pick the chart apart. If I was going to be a buyer, what are some of the levels I'm interested in? I do see there's a cheeky little gap here down at 36, so I'm going to be bidding a bit down there. I'm going to buy the double bottoms here, and if this thing actually does start breaking out, I'll add to the position if I start seeing this thing surging up through these highs here. But, there's another name for you to chew on. So have some fun there. As well, I'm looking at the board here. Just a heads up, anybody who did play the Salt trade, looks like she's running. So, we were even, I was joking on Twitter with another guy, just make sure, damn sure to have your open orders working. So it's interesting to see that the market is rocking and rolling, and there are some really cute little ideas out there that are actually moving. It's interesting to see Clammy here. The Clammy just got kicked off of Polo, didn't they? So interesting to see he's catching a bit of a bid. Not really the best looking chart though. So, but let's have some fun, and let's be hunting these alts for the double bottoms and the names that you really want to try and sneak in on. If you can find W's, let me know, and I'll be a buyer too, because I'm liking the look of this market right now. I'm loving the fact that the stock market finally broke. I've been worried about this damn stock market, and it needed to break. So we're getting that, and I'm also extremely pleased to see that when people are shitting their pants in the stock market, it seems that they're actually running into crypto a bit, which actually really pleases me immensely. So only time will tell. No guarantees from management, but I, for one, am liking what I'm seeing in the market here. So. Okay, I think I'm done my rants. Thomas, you feel like you're done for the day?
Sure.
All right. I guess, can you say that one more time?
I said it's about time to start drinking some beer.
Okay. Well, I'll only start drinking after I get my fill. Shane, can you please call up the directors of Big Rock and give me my fill, please? I want my fill, and nobody's giving me my fill. Damn it. Before we leave, I just wanted to mention one thing that I saw here, which kind of shocked me, but I guess it makes perfect sense. The UK group that found this Planet Fitness idea. Oh, Jesus, it looks like the motherfucker's running away from me here. So they ran it up to new highs, and now you can see they're in face rip falling mode here. So hats off to you UKers. My hunch is this trade's just starting to get going, and you could argue that a big part of their Raf, Bobo, Warwick, right? They came up with this idea. They were hunting it. And the one thing I really like about this idea was they were expanding dramatically, trying to expand their business, but taking on just a ridiculous amount of debt to do so. And in the low interest rate environment, okay, that's doable. Now that interest rates are cranking up, this guy could be in serious trouble. So hats off to you guys. Nice trade. I wasn't able to participate, but I can completely understand the trade, and way to go. Okay, I think I better shut up. We're well past the top of the hour. Mr. Mayor, what do you think? Are we done for the day?
Yep.
All right. You guys have yourselves an awesome rest of your day. Go have some ascorbic acid powder to put a smile on your face. All the best. And I think the only thing left to say is bye for now.